Welcome back to Stock Tricks with Nick for this week's breakout watch list from May 9th to May 13th. In this video, we'll be covering the top 8 setups coming into the week. These stocks either come from strong groups, have been showing relative strength, or have volume clues that indicate a larger uptrend is about to start. This video is sponsored by MarketSmith, which is the trading research platform that we're going to be using to break down each of the setups. And if you're only coming to the video for one stock, there's going to be timestamps in the comment section below. Here are the 8 stocks that we'll be talking about, but I don't want to spend too much time on this page because we've got a lot of charts to go over. The first stock that we'll cover is EE. This was on the breakout watch list last week, but it's also setting up this week. It's in utility gas distribution, 17th strongest group out of 197, so it's an A group strength rating. It does not have an accumulation distribution rating just yet because it's an IPO. We're looking for a little bit more data first. But it does have an overall composite rating of 90 and an individual relative strength rating of 78. Earnings per share was 0, so basically flat year over year, but we have sales up 106 and after-tax profit margin up 4.6%. Within the group of 10 stocks, this is only 8th on relative strength, and 5th on composite basis, and we don't have any fund ownership information just yet. But what I want to do is go to the 30-minute chart on this because this shows all of the trading that the stock has gone through. And last week we were looking at this tightening up area, but eventually it did break to the downside, undercutting some of these previous lows, shaking out the weaker hands in the name. But what I really like is as the market rallied, this rallied up. But as the market pulled back, this did pull back, undercut some of the lows in here. These are each 30-minute bars. But at the end of the day on Thursday, we rallied up. And on Friday, we rallied and really tightened up here under $27. So I'll be looking for an entry point at 27 with a break over $27 and manage my risk with the stop under $26.50 there. The next stock that we'll cover is KD. It's another IPO in computer software enterprises this time, 192nd strongest group out of 197. So that's an E group strength rating. It has a B accumulation distribution, 20 overall composite rating, along with a 19 individual relative strength rating. And we have seen fund ownership decline from 1084 to 759 in March. So Nick, why are we talking about this stock? Well, the last 3 days is really what is putting the stock on my radar. We've seen a bounce off the lows. We put in the lows around 1068 there. And then we had earnings, which came in negative, had negative sales, negative after-tax profit margin, but something did change because the absolute volume that came in here, we have 1, 2, 3 days of volume well over the 50-day moving average of volume. And this stock rallied from 1063 or 1068 all the way up to 1440. So a 38% move there. Very strong move with very strong volume, breaking over all the key moving averages. It does have a good amount of resistance at $15. So if I want to trade the stock, I want to go back to the 30-minute chart. Actually, let's even bring to a 15-minute just because it was the last 3 days. Again, you can see the move from 1068 all the way up to $14. Now the stock needs to rest a little bit. But what I want to see is this continue to flag out and build under $14 and looking for a break over 14 after it has consolidated. Now, going back to the daily chart, this could consolidate back to the 1368 area. You can see previous resistance now turn support after we close over that area. So if we trade down a little bit, have the key moving averages catch up, maybe this is a trade later on in the week after some tightening that improves the probability, but I'm looking for a break over 14 for KD. Next, we have LLY. This is in medical diversified, 35th strongest group out of 197. It's an A- group strength rating. It has a B accumulation distribution, a 97 overall composite rating, along with a 95 individual relative strength rating. Taking a look at the fundamentals, earnings per share were up 29, 38, 8, and then 63% year over year. Sales were up 23, 18, 8, and then 15. And after-tax profit margins improving between 25% and 30%. It's above all the key moving averages. We got the 200-day, the 50, the 8, and the 21 right at the same spot, and it's building nicely under $300. It did peak at 314, pulled back to the 50-day moving average at 276.83. Since then, we've rallied, and we're really starting to tighten up. But what I want to point out is on Wednesday, when the market rallied, this rallied as well. But on Thursday, as the market was down 5%, or NASDAQ was down 5%, S&P 500 3.8, whatever it was, this was only down 0.86%. So it was showing relative strength against the market on a down day. The next day, we see that in action on the positive side. The market was down again, but this was up 1.55%, right on the 50-day moving average of volume. So looking for this to break over $300 as a potential entry point, or if this pulls back into the rising 50-day moving average and we get the 50, the 8, the 21-day EMA all around the same spot, I'll look to start a position there and manage my risk against the previous lows here around 283. Next, we have LNTH, and this has really been a monster even during this market correction. You see, we have this high volume gap up on earnings where we had earnings per share up 257, sales up 38%, after-tax profit margins up 13.3%, and we had follow-through volume the next day up another 16% that day. We had the gap up was up 39% and then another 16%. This continued to press higher, got a little shaky here, but really just kind of looked like a frozen rope through here, pulled back, and then we had another earnings gap up 12.3% on 198% volume run rate, so almost twice the average volume of the last 50 days. From there, this continues to show relative strength as the market pulls back. This pulls back slightly to the 8-day EMA, but you can see we closed over that every single day. Jumping back to the group, it's in medical products, 128 out of 197. So it's a weak group, C- group strength rating, but it has an A accumulation distribution, meaning the heavy volume days are coming on up days, the low volume days are coming on pullback days or down days. It's got a 98 composite rating along with a 99 individual relative strength rating. This most recent earnings were over 1,000% growth year over year. Sales were up 126, after-tax profit margins up 5.6%. What I'm looking for here is just a break over Friday's high. That would be 64.93 as a potential entry point for LNTH. Next, we have LTHM. Very similar to LNTH in the stock name, but different in the group. So this is in chemical specialty, 70th out of 197. That's a B group strength rating, has a B- accumulation distribution, a 98 composite rating, along with a 95 individual relative strength rating. It just reported earnings last week, and we saw a 30% jump on a 605% volume run rate. And looking at those earnings, it makes sense. We had earnings per share up 950% year over year, along with 56% sales increase and 12.7% after-tax profit margins improvement. From there, I did actually trade this on Thursday when it took out the previous day's high. Got out a little bit. I was up about 2%, sold a little bit there, got stopped out on even for the rest. But just because I got stopped out and that one trade didn't work doesn't mean I want to take this off my watch list, because you can see the next 2 days, I guess the day that I traded it, and then on Friday, we closed just a little bit under the close from the Wednesday gap up, and we find support at $27 both of the previous 2 days here on declining volume as it pulls back. So as the market was unfavorable, this was down, 1.5% and then 0.4%. So down 2% off its massive volume move, while the market was down 3.6% and then 1.4% for the S&P 500 on Friday. So showing great relative strength, big volume move out here. What I'm looking for is if the market continues to act poor and we pull back on Monday, if this pulls back into $27, trying to start a position there using a stop loss pretty tight around like 26.40 area, or if the market conditions improve, using the high volume close of, the close of 28.55 as a potential entry point, then using a stop under $27 there for LTHM. I got 3 more stocks to cover, but if you guys are enjoying this video, please take this 1 second to like the video and subscribe to my channel. I make this breakout watch list video every Sunday and make other trading related videos. Thanks for your support. Let's get back to the watch list. The next stock that we'll cover is MRK. This is in medical ethical drugs, 33rd strongest group out of 197. So it's got an A- group strength rating. It has an A- accumulation distribution rating, a 98 overall composite rating, along with a 92 individual relative strength rating. Taking a look at the fundamentals, earnings per share have been drastically increasing, 28, 28, 84, and 84% year over year for the last 4 quarters. Sales were up 22%, 20%, 24%, and then 50%. And after-tax profit margins improving 34, 34, 30, and 34. Looking at the stocks in the group, it's second strongest on earnings per share, 5th strongest on relative strength rating, number 1 on overall composite basis, and number 1 on accumulation distribution. Looking at the chart, you can see a nice cup, handle, breakout, and then putting in another handle here, building under $89. That is the area that I'm looking to start a position on. If the market's favorable on Monday or Tuesday, coming through, breaking over $89, want to start the position there, get a stop loss under $86 here. Or if the market's unfavorable, we continue to flush lower. If this pulls back to the rising 21-day EMA, you can see we found support there last time. starting a position against the 21-day EMA and then using 85 or just under $85 as a stop loss for MRK. Next, we have NEX, N-E-X. This is an oil gas field services, 13th strongest group out of 197. So it's an A+ group strength rating, has a B accumulation distribution, along with a 96 composite and a 99 individual relative strength rating. Earnings per share this last quarter was up 117% year over year. Sales up 178. After-tax profit margins minus 14%. But you could really see how strong this group has been and how strong the individual stock has been. It seems like it keeps finding support at that 21-day EMA. We did have a quick flush as the market was pulling back to the 50-day moving average, but that found support a little bit above that. Since then, we had a quick flush on Thursday along with the poor performing market, and then an inside candle on Friday, closing in the 73rd percentile of the range, back over the 8-day and the 21-day EMA. So with this, looking for a break over Friday's high, which would be 1127 as a potential entry point, or if we pull back into the rising 21-day EMA, manage our risk against $10 there for NEX. And the last stock that we'll cover is SMCI. This is in computer hardware, 139th strongest group out of 197. So it's a weak group, C- group strength rating, B- accumulation distribution, but a 97 overall composite rating, along with a 96 individual relative strength rating. Looking at the fundamentals, we've seen earnings per share gradually increasing, and then the last 2 quarters we saw that jump 40%, then 210%. Sales up 41 and then 51, and after-tax profit margins up 4 and 3 in those last 2 quarters year over year. It did report earnings last week, and we saw this massive jump, 31% on 700% volume run rate. From there, that happened on Wednesday when the market was favorable, risk was on in the market. Thursday, we attempted to rally, but pulled back down 6.5%. Friday, down 3.4%, but the low of the day was at 50.02, showing that there are buyers at this $50 area. So the market continues to act poorly or neutral on Monday, trying to find a position right around 50 so we can manage our risk maybe at the previous Wednesday's low, $48. That's where I would be looking at. Looking at the stock, it continues to show great relative strength. I know tech stocks themselves have been continuing to get hit hard, but this from high to low, only a 29% depth. You see MarketSmith shows that consolidation. 16 weeks, 29% depth. Compared to a lot of the tech stocks, we have not seen many hold up 30% from their all-time highs. So managing risk against this $50 area on a stock that broke out on 700% volume run rate, 31% move on Wednesday, and then a little bit of consolidation Thursday and Friday while the market acted poor. This is SMCI. And that's going to be the breakout watch list for the upcoming week. If you guys enjoyed the video, please leave a like and subscribe to my channel. Big thanks to MarketSmith for sponsoring the video. If you guys like the trading platform and want to give it a try, there's a link in the description below. And finally, if you enjoyed my analysis and want to hear more, follow me on StockTwits and Twitter. Those are the 2 platforms that I post the most. Just one caveat, it is StockTrickNick on Twitter. Have a great week, and I'll see you guys in the next video.